our conclusion from spending so much money on growing the marketplace and also seeing other people growing their brands and wasting so much money on creatives and various like social media campaigns and like influencers, which didn't work at all. Our conclusion was, let's grow profitably, let's not raise more money. And of course, this coincided with the whole market changing, right? From like a D2C booming environment to like everybody hates D2C on the planet and consumer. And so we basically said, look, let's be really focused, let's be really profitable.
Hey guys, and welcome to the CEO After Dark show. Today, I have with me Alexej Pikovsky, the CEO of Alphawell Group, a holding company for digital businesses in e-commerce, services, and technology. Before he became an entrepreneur, Alexej had a background in finance, including VC and private equity. Hey Alexej, and welcome to the show.
Hey, George, super excited to be here.
To start, do you mind just telling us a little bit more about what you're working on right now? You're doing a lot of things. So what's your main focus with the businesses? What do you guys do?
Yeah, so the main focus today is split between two businesses. One is an SEO and PPC agency, which grew out of a previous business, which was a CBD marketplace. And the second business is an e-commerce business, a scented candles brand, which we acquired 2.5 years ago. And that's where a lot more growth is happening. But as you know, agencies take up a lot of your time as well. So I'm kind of trying to balance, my time and my passion. So yeah, it's kind of 50-50 between the agency and the brand right now.
I can relate to the agency taking a lot of your time. Trust me. What got you interested in this? Like to get into entrepreneurship in the first place? Because from me as an external person, like I hear finance, I hear VC, private equity, and it sounds like a very good career, right? So like, what got you into this?
Yeah, and it is a really good career, and usually it is kind of something people work really hard to get into, and then they usually don't leave it. And this was the same for me. I started trading equities. I was 16 years old. Every summer since I'm 16 years old, I had a summer internship, and basically I started my career, classic in mergers and acquisitions at an investment bank in London, and then spent 6 years basically on the buy side, investing in different companies. The reality, though, is that when I was in a private equity fund, this is after my time in venture capital, I realized that you're not learning as much anymore. And usually when you talk to founders and you're buying their businesses, you're not even perceived as seriously or with as much respect as maybe somebody who actually created their own business and created maybe like a family office, right? And so I thought, well, if I really want to understand operations, if I want to help other founders grow, I should really go through this journey myself. But before I actually understood it, I also said, hey, maybe I should create my own fund. And that's how my career actually away from, let's say, stable institutional finance started. I tried to raise a cannabis fund in summer 2019. And then after meeting 50 different entrepreneurs, mostly in Canada and California, that's when I realized that most of them were super overvalued, not best businesses to back, and that a lot of them wanted to expand in Europe and the UK. And basically, that's when I came up with the idea that, hey, why don't we create a CBD marketplace with the aim to also add cannabis down the line once it becomes legal in Europe. And basically, that's kind of how it started, right? Like we initially raised capital to then basically launch a CBD marketplace, which became the largest player in Europe. But, one of the things which in hindsight, we, I guess, realized was that without cannabis legalization, the market is too small to build a significant business. And the unit economics didn't really work for that business because the retention in CBD wasn't high enough. But the other thing I guess we learned was that because we were playing in this industry, which was really constrained around how marketing works, and you couldn't bid for Facebook ads or Google ads. SEO was the main kind of, growth channel for most brands. And we as a marketplace, we were very famous for ranking number one for most of the brands we even had on our marketplace. And so most of the brands started reaching out to us to help them on their own SEO. And that's how we launched the SEO agency, later also PPC, and got into the agency game. And then over time, we ended up shutting down the marketplace, so like a bit more than a year ago, to become profitable as a group, because 2.5 years ago, we ended up, acquiring a brand instead. So obviously there's a lot in here, right? Like we can go into more detail into like various different steps, but basically, the whole kind of like entrepreneurship move from finance came to me in terms of like, I really think that the best investors out there have been entrepreneurs themselves.
Yeah.
And then B, I actually didn't try to go straight into, being a founder of a tech company, but actually I wanted to create my own fund initially. And it just happens that I saw this opportunity and had like, enough capital committed from other investors for the fund to just pivot, let's say, into the CBD marketplace, which then pivoted again into today an agency and an e-commerce brand we acquired.
How did your time in finance benefit you as an entrepreneur, if at all?
Yeah, so the time in finance was quite, let's say, diverse depending on what stage in finance. I would say starting with investment banking, I learned a lot about, working under pressure, financial modeling, attention to detail. Then in venture capital, I had the privilege to basically build a whole like subdivision of a family office, i.e. VC investing. We only had $500 million in logistics real estate. And then I invested in all the VC funds for them. I invested in all the seed and series A companies for them. So that was like a first, let's say, entrepreneurial experience with obviously a family office in the back, but without a proper brand, which is really interesting and, gave me a lot of, let's say, courage later to then, completely leave private equity down the line as well. And then private equity taught me a lot about operating and like understanding how many things can be still done to a business once you buy a business. Because sometimes you think, well, if somebody sells the business, what else is there to do? But you will be surprised how many things a founder doesn't want to implement, and therefore how many things you as a new owner of a business can actually do. And so this was, again, like really accretive for my, let's say, career and also like, founder skills stack, I guess, because I realized, look, like even if you buy a business for $1 billion, there's still so much to do. You can probably get it to like a 2 billion, right? And like even more if it's a small business.
What stands out to me from what you're saying is this ability to acquire something and then optimize it, right? And from what I understand, your main focus now is the brand that you acquired. Can you kind of share like the story behind the acquisition? Did you see like some sort of opportunity or like what happened there?
Sure. Yeah. So what happened was basically because we relied so much on this regulatory event, which was cannabis legalization in the US, and Biden basically didn't do it. And so the whole market crashed, and we basically lost almost like the whole client base because of that. And however, we were in a lucky position that we had capital. And we were also in a lucky position that as the agency, we had the second business being the agency, we were running other brands, right? Like we were scaling other brands. And we basically understood that, okay, what we learned is we of course learned how to, build a business, etc. But we also learned how to scale other people brands. So maybe we can scale our own brand better almost than we can, scale our own, let's say, marketplace if it's like, constrained with regulatory issues. And what that meant was that we said, hey, okay, let's look for acquisitions. And then at the same time, we were quite lucky because at the same time, there were a lot of these Amazon brand aggregators who raised a lot of money. Yeah. But by the time we started seriously considering acquiring some of these brands, many of these big players started to go bankrupt. And that created a really interesting dynamic in the market where all these players spent, billions literally educating merchants that they can sell their brand. And then suddenly there were no buyers in the market because they were all in distress. And we basically said, okay, well, we are confident we can scale a brand. Let's start, reaching out to brands. And so we basically defined our vertical, which was wellness, but like a broad definition of wellness. So not just supplements, in fact, less supplements, but more, beauty, fragrance, kind of wellness, home, fitness as well. And we also said, let's definitely look only at brands who are, for example, like better than 4.3 stars on Amazon out of 5, X amount of reviews, at least, like $200,000 of annual sales. So kind of low, but potential to go bigger. And yeah, we started reaching out to thousands of brands. We reached out to 2,000 brands, like obviously semi-automated, but personalized, as you know, in email marketing. And, we ended up talking to 40 brands. We did due diligence on 10 brands, and we ended up acquiring one in January 2022.
What are you looking for? Like, what are I guess you're looking at specific metrics, right? Like when you have to acquire a company. Assume
Yeah.
that
So
I know nothing about this. Like, what are you looking
yeah. So basically, we thought about it as let's say, like a, multidimensional piece of, I guess, like list, right? With like each dimension being like, let's say, a criteria of a brand, and each criteria had a bit of a different weighting as well. I think the number, like, there were a few really, really important criteria for us. One was, do we actually generally like the product ourselves, and is it a great product, right? Because there are lots of great brands out there doing maybe something I'm not using myself, and scented candles is actually something I use myself. And like the other brands, we made offers as well. For example, with like a matcha tea brand, there was like a bottling, kind of like cool bottling brand as well. But so basically, passion and confidence in the product, that we also use it, that we like it. As I mentioned, the reviews on the rating on Amazon, and the reviews. Then also, like, not as important, but still important, was how much of a, let's say, kind of buyer's power do you have with suppliers. So we wanted to make sure that if this supplier walks away, or something happens, we can switch suppliers quickly. So we were looking for that. So supply chain risks as well. And then we had kind of like good to have criteria. So ideally, we wanted recurring revenue, which with candles is much worse than supplements, but there is still some recurring revenue. And for example, we're now looking to launch like a refillable candle as well. So that would be actually recurring revenue for us. But initially, this was not as great for us. So that's maybe one of the minuses, but this was not as much weighted as, for example, the product quality and us being really passionate about it as well. The other thing, which was again also ideally important, was the average order value of the product is more than $20. On Amazon, that's great. In D2C, in hindsight, we understand that ideally it would be $100, but then this is the critical and difficult balance if you are both on Amazon and D2C. On D2C, if you play the whole paid ads game, you want to be more than $100 AOV to make the ads work. In Amazon, because the CAC is so much lower, $20 AOV is more than enough for you to make a good margin. So, but AOV more than 20% was $20 was definitely a big one for us. And then, the other ones were, this is like, again, very Amazon specific, but there is this thing called variations on Amazon. And so if you have a parent ASIN, so like your main product, and you have the ability to launch more variations, you can leverage the existing reviews on Amazon to add more products basically to the same parent ASIN. So for example, when we bought the brand, it had 5 cents. And today we have 12 cents. So, fragrances, let's say, of the scented candle. And by the end of this year, we probably have like 20 in total. So, And every time we launch a scent, we just launched Nordic Pine. When you go in Nordic Pine with our 2,500 or more reviews now, we pretty much dominate Nordic Pine as a keyword now, because we straight away have 2,500 reviews with that. And that's really important, because with Amazon, you can really go really fast and dominate other keywords really quickly if you have a product which allows you to add more variations to it. So kind of these were like, let's say, the main criteria. Yeah, I wasn't very detailed there, but yeah.
That's super. Usually people are not, right. Like they will say, oh, like I don't know, I like the product and that's it. But I appreciate that you went into detail. So, okay, you had around 40 brands that you contacted, 10 brands that you spoke to, one brand that you acquired. And then this brand blows up by 5 times in 2 years, if I'm not mistaken. So probably you did something right there. What specifically did you do? Like, was it more Amazon focused, more D2C focused? Or like, how did all of this growth happen?
Yeah. By the way, we reached out to 2,000 brands, right? But yeah, we spoke to 40 brands. So mostly Amazon focused, because our conclusion from spending so much money on growing the marketplace and also seeing other people growing their brands and wasting so much money on creatives and various like social media campaigns and like influencers, which didn't work at all. Our conclusion was, let's grow profitably, let's not raise more money. And of course, this coincided with the whole market changing, right? From like a D2C booming environment to like everybody hates D2C on the planet and consumer. And so we basically said, look, let's be really focused, let's be really profitable. And so the first things we did was optimizing listings to increase marketing efficiency and effectiveness, which means, you optimize your Amazon SEO, you optimize your picture quality, you create new designs, picture designs, you add more ad campaigns, you optimize the existing ad campaigns. So this was like really low-hanging fruit, let's say. The second really low-hanging fruit was renegotiating payment terms with the supplier. So most people, they reach out to like suppliers and they basically, just accept the terms. But to be honest, when you do a lot of volume with suppliers, you become, a big client of them, and, they want to keep you. So you can start pushing payment terms, and which is really important on Amazon, especially because like when we bought the brand, we had a 9 months cash conversion cycle, which is so long, right? So that means, when you spend $500,000 on inventory, you basically see back that $500,000 in 9 months. Which is super, super long. So we got it down to like 5 months initially. And then last year, after we did basically, like 7 times volumes for the supplier to what the previous owner did, we managed to actually, now have like a month cash conversion cycle difference, which means we have now a situation where we only pay the 50%, the first 50% of the order 90 days after the order. And the second 50% we pay 120 days after the order. So by the time actually the other 50% we only pay, actually by that time we already starting to sell the product. And then if I look at the best brands, both on Amazon and also D2C, they almost have like credit financing with their suppliers. You know what I mean? So they don't even have a gap in cash conversion cycles. They usually pay the supplier after they even sell the product, which is like the best way to grow, right? And so this is the aim for this year. Once we smash this year, we should grow another at least 2.5x this year. I will really be pushing for even better terms to get basically like free capital almost for that in that sense.
Is the way to do that to basically have enough volume and then have the gravitas to tell the supplier that, hey, like that's what we want and that's it? Or like, how does that work?
Yeah, pretty much. What people don't understand is that usually suppliers, unless you're in some super niche space where like a supplier is a startup themselves, but in scented candles, the suppliers are bigger businesses usually, and they have credit facilities with banks, which have usually much better terms than you and your revenue-based financing partner, for example, in the UK. And so it makes much more sense for them to, take out a credit facility, be it, in Eastern Europe or in Mexico or in China, right? And then provide you with the ingredients, and you basically pay them maybe like 1% a month or less, of course, for them to provide you with that inventory without you paying for it straight away, right? And they can even make an additional kind of arbitrage or margin on that. So and yeah, once they are confident, and once you've shown that you keep ordering and you keep growing your business, they want you to grow as a business, so they will help you to do anything they can.
How does the company work internally? Like, you have the agency piece and then you have the brand piece. Do those two pieces serve the same team? Like, does the agency team service the brand also? Like, how does it work?
Mm-hmm. So the brand has 3 individuals focusing only on the brand today, and all of them have 7 to 10 years Amazon growth experience, new product development experience. So they're like super Amazon focused, because this is still our main market, even though, of course, like one of the other things which we did, of course, was also launching D2C and kind of email marketing, etc. But like Amazon is still huge for us. And then we have the agency, and the agency has a tech person, an SEO engine team with strategists, technical SEO editors, and then an army of content creators and content writers. And right now, the agency treats 96 North, the brand, as a client, right? So, for example, we did some content for the brand. So we did basically hire our own agency to do it. But on a day-to-day basis, right now, the teams are completely separate, and I have 2 completely different, management calls with 2 different teams, and the chats are very different as well. But before, like, let's say a year ago, when the brand was still not, let's say, as big, and we were not launching as many new products, which again is like a whole big work stream, right? Because you need to keep reviewing new products, you need to keep optimizing new campaigns, and launch new stuff all the time. Before that happened, there was capacity in the Amazon team as well, and we actually did run Amazon PPC for some brands. But today we basically don't take on any new Amazon brands, because the team needs to just focus on our own brand.
If you were to say how your time is split, is it like 50-50 between the 2 companies, or like what's the split?
Yeah, that's an interesting question. I guess it depends a lot also on the time of the year. Like the brand is very seasonal, which actually, again, was one of the criteria. We wanted to have not a seasonal brand, but it is what it is. Like, it is a very seasonal brand, with Q3 and especially Q4 being really, really important for the brand. So Q3, Q4, I spend much more time on the brand, because this is where the bulk of the profits and the sales are generated. And so I have to be like way more hands-on there, and like a lot more stuff is being also launched then. Whereas on the agency, it's actually more in the beginning of the year. I'm more focused on the agency. And then like towards the end of the year, I'm a bit less focused on the agency. But it also depends. I would say at the moment it's probably 30% on the brand, but increasingly going to 50%. And then the agency currently it's like 60-70%, and then increasingly going down. Although we discussed it like on a different call once, but I have so much to learn still on the agency as well, how to run funnels. And like right now we're doing like Facebook funnels, email outreach, etc. So I'm intentionally spending more time there to just like upskill myself, even though I don't really need it, because I have a team to do it. But sometimes it's really good to know a bit more than just high level stuff, so you can challenge your own team to just run operations even better.
Do you see value in acquisitions related to service businesses also? Like, would you ever acquire another agency? Would you sell the agent?
Yeah,
Like, what's your view on that?
it's a really interesting question. We actually, after we stopped looking for acquisitions with the e-commerce brand, because initially we actually wanted to acquire more e-commerce brands in the wellness space, because we still had a really good pipeline of brands to go after. But the main issue which stopped us was that inventory financing became way more expensive because of interest rates going up. And we also realized that the true value in a brand is having an omnichannel brand rather than just Amazon. And if you want to be omnichannel, you need more time, you need more focus, and you need more money to basically grow a brand omnichannel. So that's why we stopped looking for more acquisitions and kind of decided to double down on the brand. Now with the agency, it's another story, because we also at some point said, hey, okay, let's maybe look into acquiring some agencies. But the reality is that any agency below $1 million in sales is very much founder driven as an agency. And the moment you don't have the founder, you don't have enough systems and enough, let's say, lead generation to keep the agency alive. And we don't have enough money to acquire a bigger agency. I mean, does it make sense to acquire a bigger agency if one has money? Like, I think so. There are a lot of private equity funds who now acquire agencies. Like, agencies did actually become kind of sexy again, because you can optimize a lot of stuff. You can optimize your margin by introducing a lot of AI processes. You need less people these days. Lots more automation is possible. But ideally, you have really good lead gen and growth funnels sorted, because otherwise, yeah, your agency can fail quickly as well.
Nobody is gonna acquire you. I get it. Okay. What I noticed, and I think it's quite interesting, is that you're part of a bunch of private groups, right? Like the OnDeck group. Hampton is another group that I saw. I didn't know about Hampton before I saw it in your profile, and I'm assuming you actively sought that, right? Like you were interested in networking with people and like wanted to be part of those communities. First of all, has this been valuable? What is your experience? And then, like, do you have any tips for people that want to kind of network with other high value people?
Yeah, absolutely. So I would say, for me, without communities and without networks, I probably wouldn't have done everything I did. So it was really instrumental for my, let's say, career success, so to say. So how it started was that I actually joined initially OnDeck Scale, and OnDeck still exists, but only the OnDeck founders cohort, which is people who want to launch a business or who maybe just launched the business, and they get put into like cohorts, and there's like a bit of a structured program around it. I was in the Scale cohort, which had 40 founders, and 2 of them were unicorn founders. And so every week, for like 2 times a week for 6 months, I was in various breakout rooms with these guys talking about stuff and like learning. And it really made me understand that the US and Canada has just such a higher founder density, and people think much bigger and are way more, let's say, driven also than, let's say, in London or UK, which is way better than like continental Europe, right? And that was really, really interesting for me. And from that community, I actually basically got into Hampton, because the mastermind coach in OnDeck was also a mastermind coach in Hampton. And then when Hampton just started, she introduced me to Hampton. I interviewed with them, and then, became member there. Hampton is like a community around Sam Parr, who became really famous with selling The Hustle, which is like Morning Brew, a really famous newsletter. And then he created a YouTube channel and podcast called My First Million. So he is surrounded by thousands of entrepreneurs who basically love to scale in an almost bootstrap way. And that's like a very different, again, mindset than we get taught in, let's say, London or maybe Silicon Valley, where VC money is the only way to launch a business. And so I started to basically hang out a lot with founders who are like bootstrap, have big agencies, big brands, and really learn how to grow without necessarily raising funding. And this is kind of what also made me not want to raise again. And I became basically profitable as a business. The other community I'm also part of, which I also highly recommend, especially for people who are completely remote, is one called Dynamite Circle.
Yeah.
And that's one where it's a big community of digital nomads and digital nomad business owners. And so for the last 1.5 years, I've been also part of them. And that, again, helped me a lot, also like structuring business processes and, aligning, teams and incentives for management, et cetera, et cetera. So yeah, highly recommend it. And I think, there is a really simple way, you go on the website of Hampton or Dynamite Circle or whatever, and just, click apply and, interview with them, and, that's it.
I think they have some pretty steep requirements though. Like what if somebody's, I don't know, like slightly less impressive than yourself? Like what would you suggest they do to kind of like perhaps reach out to somebody like you so that they could kind of learn from you? Not necessarily you, but
Yeah.
you can.
I mean, look, there are so many groups, right? Like we met obviously in the e-commerce minds group, which is a copycat of my own, actually, WhatsApp group. Matteo will tell you, called Growth Minds in London, which was on the back of OnDeck created. And so, look, I mean, if you're starting from scratch, there are so many Slack groups, WhatsApp groups, events you can go to. In all fairness, like if you have a business making at least, I think like $200,000 a year, even Dynamite Circle would already accept you. The only one really hard to get in is indeed Hampton. But as I mentioned, yeah, there are lots of other groups and also industry specific groups you can join, and just start talking to people, start just doing coffees or whatever, Zoom calls.
If you were to look back in your entire career, and you've done quite a few things, quite a few diverse things also, like what's the number one thing that you would advise people to do, like in entrepreneurship? And particularly if I were to focus this a little bit more when it comes to scaling a business, like what's the number one thing to scale a business?
Yeah, the number one to scale a business is probably give it time, because a lot of the things which other people do to scale is just a process of, trial and error until it works. And if you look at guys like Alex Hormozy and all these, like, let's say, gurus out there, which, are impressive, but all they had was time and patience, and they were living a very bootstrapped life, very low cost, until their funnels started working, right? And once their funnels started working, they were being creative around financing, with credit card debt and all this kind of stuff, which basically, gave them this like crazy trajectory, and that's how they grew. So I would say stay patient and resilient, and just keep trying different offers until something works.
Love it. All right. I think that's a good place to end the episode, Alexei. Thank you so much for taking the time. I think it was a really good one.
Thank you.